Time is 8:17. In just over an hour, the stock market will ring that opening bell on Wall Street. So here's what the New York Stock Exchange closed at Wednesday right now on your screen. The Dow down about 13 points at close, likely driven by the current situation with the war in Iran. This morning, stock futures showing a bit of a rebound despite the current turmoil. Joining us this morning, Matt Eilers with Medalist Wealth Management. Of course, you see the uncertainty that we dealt with at the end of the day yesterday to the futures this morning, kind of showing that little bit of a rebound. Uncertainty's been kind of the name of the game right now. So, I mean, what do people need to pay attention to if they're looking to continue to invest in the stock market here?
I think, well, let's think about where we are in the year. We're in July. We're at the halfway point or beyond the halfway point. So think of this as where it's halftime. We're having a locker room conversation here. And let's look back at where we've been the first 6 months. And I think 2026 was a really good example of the fact that the headlines and the markets don't always move together. If you look at everything that investors have faced this year, there has been plenty of reasons to panic, a lot of uncertainty with, geopolitical tensions, which, again, are escalating a little bit right now, which is increasing volatility. Look at the interest rate environment that we've been having. Look at the inflation that has really not been coming down to a degree. These are all things that over the course of 2026 could have told investors, panic, sell, get out of the markets. But aside from all these things, the markets have been incredibly resilient. We've seen ups and downs. And as of the close of business, I was just tracking some of these numbers. End of Tuesday, you got the S&P 500 up over 9% year to date. You've got the Dow over 10. You've got the NASDAQ over 11. You've got the Russell over 20%. These are all, rates of return that if you had experienced in the course of a whole calendar year, you'd be happy. And we're just halfway through. Now, we have no crystal ball to understand what's going to happen, but there were so many reasons that investors could have panicked mid-year and avoided, some of that upside. We know that volatility is normal. And we know that with whatever is going to go on overseas or here abroad, that we need to stick to a plan. And investors that have stayed the course and stayed disciplined throughout the course of this year, they've been rewarded very well. You mentioned the headlines, how these things do change every day, not to have that knee-jerk emotional reaction when it comes to things like the war in Iran or maybe other things like interest rates as well. But is there something at this point that you would be paying attention to in the stock market as maybe an indicator of how I might want to throw my money? I know you said you don't have a crystal ball, but there's got to be something you look at. I think one of the biggest things that you want to keep an eye on is your appetite for risk and whether or not your portfolio reflects that, okay? So think about it. We're halfway through the year, and if you were in a portfolio where maybe you were 80-20, 80% equities, 20%, bonds or treasuries or something of that nature, this could be a time to rebalance, because if your equities are up 10%, now all of a sudden your portfolio needs to be kind of rebalanced. But I think it's a good checkpoint to say, all right, we're halfway through the year, we're having that locker room conversation. Are we still taking the right amount of risk given the current volatility? If the volatility that we see right now makes us a little bit uneasy, it could be that we're taking a little bit more risk than what we have the appetite for. So I like to measure our own risk. Then I like to measure the risk of a portfolio to see, are those things in alignment? If they're not, mid-year, we might need to make some of those adjustments. Obviously, this is difficult to do on your own. That's why I always recommend talk to a financial professional or seek the help of a team that can help you measure these things and then understand what changes you need to make. But I'm not a huge fan of looking for certain indicators to make emotional changes about, because if we look back, emotion always tends to be the enemy of the investor. I like to have a plan, have a process, stick to it, and let that discipline pay off.
Well, let's talk about that halfway point a little bit more. Let's zoom in on some of the things you were just pointing out. What are the questions right now that we should be asking ourselves when it comes to that mid-year check-in?
It was funny. I was thinking about this. We met together back in January, and we were talking about, the resolutions for the new year. What are some things that you're going to change or work on? I think it's time to go back and audit yourself a little bit and take a look. Did you reach some of those goals, or are you on track to accomplish some of those things that you set forth back in January? And I would really zero in on savings and spending are the first two areas to look at. So if you put together a saving plan, have you been following that? Are you saving for a child's college? Are you saving into or making contributions into your retirement accounts the way that you said that you would? Have you been saving to pay down debts or things of that nature? What does that progress look like? Let's measure that. Let's figure out, do we need to make any course corrections so that we hit those goals by the end of the year? And then summer is always a really good time to look at spending. They say that there's this spending.
Not even talk about it.
I know, right? We don't want to talk about it. Especially with where inflation's been. We're spending more money. We know this. We know that there's a spending creep that's been creeping into our lives. But let's just take a look at our budget or our spending plan and figure out, do we need to make some mid-year adjustments so that we stay on track with whatever goals that we set in January? And then again, like we just talked about this, the investment side of things. This is a good time to spot check, where is our portfolio? There's a good chance that the portfolio is up, that it's higher than where it was. Should we rebalance? Should we be taking more or less risk in understanding what that means? But then also, we're over 6 months into the year. Life changes.
Right.
Life happens. There's a lot of things that maybe have transpired for you. You could have had a marriage. You could have lost a family member. You could have received an inheritance, had a child, moved jobs. There's a number of things. All of those major life events really need to be cared for inside of your financial plan, because there may be some things that you should take advantage of, or things that you need to work on so that they don't come out and get you because of life events that need to be reflected in a plan. So as your life unfolds and evolves, your financial plan should too.
Yeah, something that you may not have foresought back in January. Now's a good time to have that gut check with yourself. Matt Eilers, we have to leave it there. Thank you so much for your time.
Thank you.